네, 안녕하세요. 오늘도 번역물을 들고 온 번역 셔틀 에릭이라고 하고요. 이제 오늘 들고 온 영상은 이 빌 밀러의 CNBC 인터뷰를 가져와 봤습니다. 네, 우선 이제 빌 밀러를 간단하게 소개를 드리자면은 나이는 이제 1950년생, 올해 73세고요. 밀러 밸류 파트너스라고 본인의 이름을 딴 운용사를 현재 창업을 해서 운영을 하고 있고, 운용자금은 대략 한 3조 원이 조금 넘는 것으로 알려져 있습니다. 빌 밀러 하면은 빅숏에 좀 카메오 출연을 했다라는 얘기가 있는데, 뭐 직접 출연을 한 건 아니고 이제 빅숏 영화에 이런 장면이 나옵니다. 이 금융위기가 터져서 이제 시장이 막 하락을 할 때 앞으로 시장이 더 망할 거라고 하는 이제 빅숏의 주인공 한 명과, 그리고 시장이 괜찮다, 투자은행들 망하지 않는다 라고 주장하는 구루가 나와서 이렇게 1대1로 대담을 벌이는 장면이 있는데요. 거기서 이제 투자은행 괜찮다, 앞으로 시장 괜찮을 거다 라고 말하는 이제 캐릭터의 이제 모델이 바로 빌 밀러입니다. 그래서 빌 밀러는 실제로도 금융위기 당시에 굉장히 큰 손해를 본 것으로 알려져 있습니다. 네, 거의 90%에 가까운 손해를 봤다고 알려져 있는데, 근데 또 이게 재밌는 게 거기서 이 사람의 커리어가 그대로 끝난 게 아니라 금융위기 이후에 다시 또 화려하게 부활을 해서 컴백을 했습니다. 그래서 19년도, 20년도에는 연속으로 세 자릿수 수익률을 올리기도 했고요. 금융위기 이전에도 S&P 500을 15년 연속으로 이긴 걸로도 유명합니다. 저희 채널에서도 전해드린 적이 있는데요. 이 본인 전 재산의 반은 비트코인, 그리고 나머지 반은 아마존의 몰빵을, 그것도 이제 레버리지를 껴서 몰빵을 했다고 고백을 해서 꽤 화제가 된 적도 있습니다.
Was famed investor Bill Miller. He is the chairman and chief investment officer at Miller Value Partners. It's great to have you here, Bill. Let me point out for those listening on the radio, I believe you are wearing a Bitcoin hat.
Yes, I am.
Care to elaborate on, after we've heard from Buffett and Munger, Warren Buffett once again saying he wouldn't own all the Bitcoin in the world for $25, stable coins collapsing, platforms, having speculation about bankruptcy. What is your bull case, and why do you think the public should think about owning Bitcoin here?
Well, I've owned Bitcoin for a long time, Kelly, as you know, and I've been through at least three declines of over 80%. I think this is probably the 10th decline of over 50% in Bitcoin. I own it as basically an insurance policy against financial catastrophe. We saw when the pandemic hit that it got annihilated quickly and then came back quickly again to new all-time highs. So I don't have a view about whether Bitcoin's done going down here. I'm kind of surprised it isn't lower because of what's happened with the Terra, stablecoin getting destroyed. And I think the Fed has correctly said that these stablecoins are problematic. There's actually a really good piece by a law professor named Hillary Allen, who said that that basically stablecoins particularly are like shadow banking 2.0, which, remember when you wrote about the reserve fund today blowing up,
right?
And I think that was because those weren't regulated. So I do think it's an area of fairly high risk and high volatility. But again, for me, I think I haven't heard a good argument yet why anybody shouldn't put at least 1% of their liquid net worth in Bitcoin. Anybody can afford to lose 1%. But you don't have anything in your portfolio that can go up 10 times or more from here.
But if you're owning it as a hedge against financial catastrophe, hasn't it proven it's both susceptible to broad market sell-offs and liquidity, and that it could have its own financial catastrophes, that it might be sort of the opposite of the kind of investment you'd want to own through those periods? It's not like it's up right now. It's basically acting like a high-valued tech stock, like an arcane name or something.
Yes, that's exactly right. The correlations of Bitcoin have bounced all around since it was created about 12 or 13 years ago. The correlation right now is with risk on, risk off. So when the market's doing well, then Bitcoin's been up, and when the market's doing poorly, Bitcoin's been down. And I think those correlations can continue to bounce around. So again, I don't have a particular view. I mean, if Bitcoin was in half from here, would I be surprised? No, I would be chagrined because I own a lot of it, but I wouldn't be surprised.
Are you selling any? Have you sold any?
The short answer is no.
Would you think about selling any now, or are you the true diamond hands here?
No, the only time I ever sell anything, and I guess I'll clarify that, I have sold stuff to meet margin calls because I'm always on margin, and the stuff that you sell is the stuff that is very, very liquid, for me anyway. But again, that's just a particular thing. Jesse Livermore talked about basically losing money being a tuition payment because you learn something. And I would say that the tuition payment for me has been very high since November. I hope President Biden gives me some debt relief.
Well, you're not the only one.
Payments.
So let me ask then, because you have been through so many of these cycles, and unlike many other value investors, you are still bullish on Bitcoin specifically. What would you say to other investors who have been caught up in parts of the rest of the crypto collapse and aren't sure whether they should rotate from part of the, from a crappy stable coin into Bitcoin, whether they should just liquidate entirely, or whether they should never dabble with crypto again, or just seek out, the Bitcoin, Ether, if you believe those are blue chips, go that route? Can you just give kind of your final take here on what you think this is all going to mean for the next couple of months?
Well, a couple of months, I don't have a clue. My view is if people have lost a lot of money in crypto, they've been speculating in stuff that they probably don't know anything about, especially if they're surprised to have lost money, because most of the ICOs that came around in 2017 have gone to zero. And I'd say you've got, probably 10,000 coins right now, and all except for Bitcoin, in my opinion, even including Ethereum, have competition. And some of those things, there's I don't know, 4,500 public companies or so. And there might be 4,500 venture things involved in the crypto space that might work out. But I don't have the expertise to evaluate them. And I think you have to think of them as venture investments, which means that they're going to be driven by power laws instead of, typical Gaussian distributions, which means that most of them aren't going to work. And a few that do work will do very well. But I don't know which those are. I'm comfortable with Bitcoin.
All right, last question on this. Obviously, much more important to talk to you about the broader markets. But then, do you think that Bitcoin is a buy here at, let's say, 29,000?
I would say that, again, I'll repeat what I said earlier. I haven't heard a good argument about why you wouldn't put 1% of your liquid net worth in Bitcoin. If you lived in any of those, colorfully named countries by Donald Trump, Venezuela, Argentina, Lebanon, Turkey, Nigeria, Iraq, Ukraine, Russia. Russia lost 50% of their reserves when the U.S. government decided that it was going to sanction them. So I can't see why you wouldn't have something in Bitcoin just as a hedge. Again, anybody can afford to lose 1%, or you shouldn't be investing.
Well, and as you said, in your case, this was much bigger than 1% in the last couple of months. So let me pivot and talk to you about the markets more broadly, about stocks. Again, to remind our viewers, back in March of 2020, you came on this program and said that you thought stocks had a generational buying opportunity that was pretty much right at the market lows during the pandemic. And we've seen stocks make a spectacular comeback since. Now we're starting to revert back to some of those pandemic levels, even in names like Amazon, Netflix, for instance. So what do you think of the market overall? Do you think that we've put in a bottom here?
Well, first of all, I have no idea if we put in a bottom or not, and neither does anybody else. I would say, though, that it was a relatively easy call back in March of 2020. You could identify what the problem was. It was a pandemic. The Fed came to the rescue very, very early on. This is very different. This is much more like, I think, the early 1970s. So no one who is of working age, meaning anybody who is 65 or younger, has ever invested in a rising rate, a secularly rising rate, rising inflation environment. And only a few of us who are much older than that, myself, Lee Cooperman, Mario Gabelli, perhaps, who have invested in those kinds of environments. And so it's just a very different, the regime change. There's been a major regime change right now. So you got rising yields, you've got rising inflation, you got rising oil prices. You have a war in Ukraine in 1973, October 6th. I remember well because I was a duty officer in the Army at the time. That was when the Arab-Israeli war broke out, and that was the trigger to a lot of the turmoil that we saw throughout the 1970s. It took 10 years, and finally Paul Volcker to break that inflation and getting when treasuries were 14%. It's a much different environment now from what it was in March of 2020. Now that said, we have today I think we have 6 new highs and 2,000 new lows in the market, and that's pretty extreme. There were, as of I think a day or so ago, there were roughly 100 S&P stocks that were 52-week lows, another 120 or 130 that are within a couple percent of those lows. So 200 S&P 500 lows have marked the bottom in most of the corrections that we've had, from 2011, 2015, 2016, 2018. So I think we're close to an intermediate low here. But again, it's a different environment now. And I think that the types of stuff that worked in the 1970s are the types of things that will work today. And so some of those are basically, you're talking about low PE, high dividend yielding names like Cliff Asness, runs a value portfolio. He's actually up this year nicely in his hedge fund. But names like, OneMain Financial is 5 times, General Motors is 5 times, Taylor Morrison, one of our home builders, is 2.9 times earnings. We just talked to Sheryl Palmer, the CEO, excellent CEO, the other day. I mean, they're hitting on all cylinders at Taylor Morrison, and their stock is very cheap, and they're buying it back. Bosch Health is 2.3 times this year and 2.1 times next year, and it's holding in Bosch and Loan, which they're going to spin off. It's holding at 90% holding, and that is greater than the current market cap of BHC. So there's a lot of values out in the marketplace today, but I do think that there's, it's a different regime, as I would say.
Well, let me revisit some of the names that you mentioned when you were on with us briefly in February. Facebook down 14% since then. Tupperware down 56%. Vroom is down 81%. Amazon and Gannett down 34%. Alibaba down 32%. Which of these names would you stick with? Because it sounds like what you're doing is rotating into a different set of stocks for the environment that you just described.
Yeah, I would say, we were totally wrong about Vroom. And you've seen that Carvana's down 90%, I think, since probably I was on that show. And I think that the Garcia's father and son have actually bought more stock, and they've got a high yield bond that yields over 10% right now. But of those names, Facebook, Amazon, clearly we own, and I think are great names in here. I'm actually going to go out and to visit Amazon later this month. I forget which other ones you mentioned.
Sure. Kelly. So also Alibaba, Gannett, Tupperware obviously had terrible earnings the other day. Then there's a couple of Bitcoin names like Silvergate and Stronghold. We already talked about that. But I think for picks that are more like Gannett, Alibaba, Tupperware.
Well, Gannett, I'm a large personal holder of it. It's small, and it's too small for the funds. I do think that, you mentioned Silvergate, which we didn't. Silvergate is down at $8 today, probably on the Terra blow up because it bought Facebook's DM technology. But Silvergate's going to do a stable coin probably in the next year or so using that technology. And Silvergate is a federally regulated bank. And so the Fed is going to be, I would say, probably delighted that Silvergate's going to do that, so that people don't have to go to these stable coins that don't have the regulation around them. So I like that one. I like that one a lot here in the crypto space.
Any comment on Tupperware, which seems to be emblematic of the inflationary environment?
Tupperware, we've been wrong about. I think Miguel Fernandez there is really, really good. They have a new CFO. They've been hit with resin prices. They've been hit with losses in China, especially, which is one of their growth areas. So I think my late partner Ernie Keeney, who used to talk about when we have one of these names that goes down the way this one has, 60, 70%. You talk about, it's like in hockey going behind the net, but come out the other side. So I think, we're behind the net on Tupperware here, but I do think it's got good management, and I think they're doing the right things.
When you say that this is a different market or a harder call than the pandemic lows, it sounds like you're saying that the call that we're bottoming may be, somewhat easy to make, but that it's less clear what the market upside is from here because of those analogies to the 1970s, that you have to get maybe a little bit more specific in the kinds of holdings that you have. Is that what you mean? I mean, what about those people who worry that equities won't perform at all if we're in that kind of decade all over again?
Well, equities will sure perform better than bonds.
Yeah,
which are having one of their worst years in history. Although we've had a rally in the last few days, but I think in an environment where the Fed is determined to get inflation under control, and they can do that. The problem is that right now, while the 5-year break evens are around 3%, and if that's the case, that's great. If we're back to 3% by that time, because we're way above it. We're way above it right now. But it's typically taken about a Fed funds rate of 100 basis points higher than the Fed's preferred target of the PCE. So, and that's running probably in the fives right now. So that's probably going lower, but still you're talking about a neutral rate, which is, I think, a lot higher than potentially, I would say potentially a lot higher than the market is currently pricing in. But again, neither I nor the market knows what the future is going to hold on that.
So on the Fed, you're not in the business usually of trying to tell the Fed what to do so much as anticipate what they are likely to do here. But do you think Powell is going to, some now think he's kind of a dove in hawk's clothing, that, he's not serious enough about tackling the inflation problem. And we might have had a bit of a tantrum the past few weeks since the Fed meeting in response to that. Does he need to be as hawkish as Powell? As Volcker, would you prefer to see something a little bit more strong from them, or do you think that the landscape here risks breaking if they're too hawkish and that perhaps some of these imbalances will resolve themselves?
Well, Bill Dudley, the former head of the New York Fed, and Neil Kashkari, a former Fed governor, have both talked about the Fed maybe having to have stocks be a lot lower, and that being the way in which they can get inflation down. I would just note that despite what they said, the Fed has a dual mandate. It's not just to get inflation down; it's inflation, it's full employment and inflation, and therefore economic growth to get full employment. So I think they've got to balance that. The deflationary forces that we saw the last 10 years, we had, I think, only 2 quarters in 10 years prior to this inflation breakout. The Fed even got to 2%. So there's a lot of deflationary forces out there, including demographics. And I think the Fed is going to be data dependent, as they should be, and they're going to get inflation down one way or another. But I think they've also got to be alert to the fact that they're trying to avoid a recession. Now we're not close to that now, but the market's certainly worried about recession, as you can see in the way that the economically sensitive stocks are behaving. I mean, General Motors is 5 times earnings, and they're doing great, and you can't get cars these days.
And again, to reiterate,
a lot.
Sure, and those names that you mentioned from earlier, in case people missed them, you're looking at General Motors, OneMain Financial, Taylor Morrison, the home builder, Bausch Health, that these are examples of low PE, high dividend yielding names, which is a strategy that you think could work here. And again, thank you, Bill, for all your time today. So let me just revisit as we let you go. Do you think we are close to a recession right now, in danger of slipping into one?
No.
Do you think that risk is much higher in 2023?
Well, I don't know about that. Again, as you know, when I used to write all these quarterly market letters, my one recurring theme was nobody can predict the market, and it's kind of dumb to try and do that. The market goes up most of the time because the U.S. economy grows most of the time, but sometimes it goes down, and it goes down when there's a recession. The other key point is that the economy does not predict the market. The market predicts the economy. And sometimes it over predicts it, as George Soros has pointed out with his reflexivity.
네, 저희가 이제 저번에 넷롭 영상에서도 이제 소로스의 재기성 이론을 말씀을 드렸는데, 이제 소로스의 재기성 이론이 뭐냐면은 이 관찰과 참여가 독립된 게 아니라 이제 서로 영향을 주고받는다는 겁니다. 그러니까 우리가 관찰을 통해서 어떤 지식을 얻고 그 지식을 기반으로 해서 행동을 하면 그 행동이 다시 지식에 영향을 주고, 그 영향받은 지식은 다시금 그걸 기반으로 하는 행동에 영향을 준다, 이런 얘기인데, 뭐 예를 들어서 이제 금리가 올라갈 거니까 이제 성장주의 멀티플이 낮아지고 이런 성장주의 밸류에이션에 여러 가지 좀 안 좋은 변화가 있을 것이다 라고 인지를 하고, 그거에 따라서 이제 투자의 행동에 옮기겠죠. 성장주를 뭐 숏을 한다든지 판다든지 이런 행동을 하게 되면 당연히 주가에 부정적인 영향이 생깁니다. 그런데 또 이렇게 주가가 하락을 하게 되면은 이게 다시 성장주의 밸류에이션에 영향을 미친단 말이죠. 그리고 이런 식으로 연쇄가 일어나게 되고, 이게 또 방향성을 띠면은 그게 계속 자기 강화가 되면서 그쪽으로 계속해서 나아간다 라는 게 이제 소로스의 재기성 이론에 대한 간략한 소개였고요. 이 소로스의 재기성 이론이 단지 이제 투자에만 적용되는 게 아니라 이제 본인이 세상을 바라보는 뷰를 재기성 이론으로 설명을 하거든요. 그래서 이 재기성 이론에 좀 더 이제 관심이 있다 하신 분들은 이 책을 보시면은 소로스의 재기성 이론에 대해서 좀 더 파악하는 데 도움이 되지 않을까 생각합니다.
But I think the market is clearly telling you that there's a much increased risk of recession. Will we have one? Who knows? I don't have any idea.
And either way, these are the strategies that you're sticking with for the market that we're in. Which how can I quote you here? You think we're close to a bottom, close to an intermediate low here on the record. There we have it.
Yeah, given the number of new lows relative to number of new highs, I would certainly say that there's a lot of pessimism priced into the market, and a reflexive rally from here or from 5% or more lower would not be at all a surprise to me.
All right, we'll leave it there. Bill, thank you so much today. It's good to see you.
Great, thanks, Kelly.
Bill Miller with Miller Value Partners.
네, 영상 잘 시청하셨나요? 이 영상에서 빌 밀러가 앞으로 이제 시장의 환경이 바뀐다. 그거에 맞춰서 이제 성장주에서 가치주로 좀 로테이션을 해야 될 필요성이 있고, 그리고 이 성장주 중에서도 좀 필요 이상으로 많이 빠진 괜찮은 이제 고퀄 성장주들이 있다라고 얘기를 했는데요. 그러면 본인은 올해 1분기에 어떻게 투자를 했을까 하고 한번 살펴보니까 우선 가장 많이 산 5개 종목은 이렇습니다. 그 중에서 이제 클리블랜드 클리프라고 이제 철광석을 채굴을 하고 이제 철광을 생산하는 기업을 가장 많이 샀고요. 두 번째는 이제 오빈티브라고 이제 천연가스를 생산하는 에너지 기업을 샀습니다. 세 번째는 이제 시티그룹 이제 금융주를 매수를 했고요. 네 번째는 테바라고 이제 복제약 쪽에서 거의 뭐 1, 2위를 다투는 이제 제약회사를 매수를 했습니다. 금속이나 에너지는 현재 뭐 원자재 가격이 오르는 국면이니까 매수를 한 것 같고, 또 시티그룹 같은 경우는 금융주가 전통적인 가치주고 이런 시기에는 배당 수익률이 높은 기업이 좋다고 했기 때문에 그거에 맞춰서 산 것 같고요. 테바 같은 경우는 이제 현금 흐름이 괜찮거든요. 근데 또 이제 스태그플레이션 국면에서는 이 현금 흐름이 괜찮은 기업들이 또 각광을 받기 때문에 그것 때문에 이제 테바도 이제 1분기에 많이 산 것으로 보입니다. 알리바바 같은 경우에는 이 많이 두들겨 맞은 성장주를 이제 주축하는 차원에서 산 거 아닌가 싶은데요. 알리바바 말고도 1분기에 페이스북도 굉장히 많이 샀습니다. 이제 알리바바와 메타의 이 PER이 11, 15 정도 되거든요. 그래서 괜찮은 이제 성장주인데 필요 이상으로 좀 많이 빠져서 싸졌다라는 판단 하에 들어간 거 아닌가라고 생각이 되고요. 반면 가장 많이 판 5개는 아마존, 우버, 뱅크 오브 아메리카, 그리고 그다음 마지막이 이제 리얼이었습니다. 아마존 같은 경우는 이 콜옵션으로 많이 들고 있었거든요. 그래서 아마존 기업 자체를 안 좋게 보기보다는 아마도 이제 마진콜 문제 때문에 처분을 한 게 아닌가 싶고요. 그리고 우버나 JD, 그리고 이 리얼은 이 명품 리셀 플랫폼이거든요. 그래서 요 3개 같은 경우는 아직까지 이익을 못 내고 있습니다. 현재 적자를 보는 기업이기 때문에 이 시기에는 역시 맞지 않다고 판단을 해서 매도를 한 것 같고, 뱅크 오브 아메리카는 금융주인데 왜 매도를 했느냐 보면 시티그룹을 많이 샀잖아요. 빌 밀러가 강조한 이제 PER이나 뭐 배당 수익률을 보면은 시티그룹이 뱅크 오브 아메리카보다는 낮기 때문에 시티그룹에 좀 더 집중을 한 게 아닌가 생각이 됩니다. 네, 그래서 전반적인 내용을 정리해보면은 이렇게 될 것 같습니다. 그러니까 하늘이 무너져도 솟아날 구멍이 있다. 이제 시장의 패러다임이 바뀌었으니까 이제 성장주에서 가치주로 로테이션을 하는 게 맞는 것 같고, 근데 다만 힘든 시기긴 하지만 주식은 결국 장기적으로 상승을 할 거기 때문에 지금 이제 가격이 빠져서 많이 싸진 성장주를 매수하는 게 괜찮은 선택이다 라고 본 것 같고요. 그리고 경기 전망은 이제 본인은 계속해서 모른다고 했지만 결국 말을 들어보면 이제 생각만큼 나쁘지 않을 거다 라고 보는 것 같습니다. 그래서 뭐 제 뇌피셜로 대가들의 시각을 한번 정리를 해봤는데요. 빌 밀러는 뭐 시장이 힘들기는 하지만은 그래도 70년대를 잘 참고를 하면은 지금 잘 헤쳐나갈 수 있는 방법이 있고, 그리고 장기적으로 보면 지금 좀 싼 주식들도 있고, 그리고 뭐 경기 침체도 곧 올 것 같진 않다는 식으로 얘기를 했기 때문에 꽤 긍정적인 쪽에 한번 위치를 시켜봤습니다. 네, 그러면 지금까지 영상 시청해주셔서 감사합니다.